Hello everyone, this is TobeTada with another video of crypto trading. Thanks for checking by and let's dive right in. So for today I thought I'd give you my long-term perspective on Bitcoin and perhaps we'll analyze the short-term as well. And if we look at the weekly chart for Bitcoin, the data doesn't go too much back here for this view here, but you can see basically in Elliott wave theory that's 1, 2, 3, 4. And the idea is basically that we're in this fifth movement here, this fifth wave here, because the impulse wave in Elliott wave theory is always divided into 5 waves. And so if that is true, then we can look at the past, especially this part, and see what we could perhaps expect. Because similarly to the bear market of 2018, 2014 was bear market as well, and we lost in both cases, about 80% of value. And so that gives us a pretty good idea that indeed we could see a very similar upward movement here, and that we are in this fifth wave. One difference is that we basically saw a much stronger upward movement here than we saw in 2015. The price back then was basically a sideways movement and then, I guess, gradually picking up again in the fall of 2015. And of course we had these smaller waves here, and it's quite impossible to say how we could mark this impulse wave, perhaps a 1, 2, 3, 4, and an extended fifth wave, or perhaps a 1, 2, 3, 4, and a fifth wave, so that would make the third wave quite extended. I don't think anybody can really give you a good answer on that. The idea is that we're in this fifth wave here, and so we're expecting in the long term the price to go up. But as you can see, the price dropped quite significantly in that time as well. So if you take this movement and put it back over here, you might get something like this here, because it corrected itself up here to about 10,000, 11,000, and so that would be about similar to if we have a price of about 500 or perhaps 600 almost, and then having this correction here. And you can see that that would have been a lot more bullish than what we had here. Now that could be the case because the fifth wave could be extended and very bullish, or indeed we could still see a correction actually back down to 6,000, and indeed back down here it went back to about 3,000, 4,000. I think this is not the case because the waves of course never repeat themselves identically, and also it could be indeed that this fifth wave is a lot more bullish than this third wave. You can see by like putting this wave that we saw right here into this third wave, it would look like this, and perhaps if the price indeed goes up here again, we could expect the price to, or it would have been this movement back then. And so by comparing that, you can see this price is a lot, or this wave here would have been a lot more bullish, but not impossible. I guess that would be my point. So because one could argue that indeed if the price is going up here again, this is a very bullish movement here, but I think that is not necessarily a reason for why it couldn't be a very bullish movement here. It's definitely in the realm of possibility, and you can see these two lines converge here again until we have this massive increase here back in 2017. So in this scenario, I guess the price would perhaps stay around here, and then we'd have another breakout to the top, because I guess indeed this would be our first 1-2 wave of the 5th wave here. Let's have a closer look here. Go down to the daily chart, and you can see that, of course, after this correction back to about 8,500, which we actually anticipated because of this ratio of 0.618, which worked quite well, we had this increase of about 40%, and I argued that we'd be having or seeing prices possibly to about 8,500. And my reasoning behind this was, if I go to the 4-hour chart, that if we see this such a massive increase here in price, this happened only over a couple of hours, the impulse wave is basically finished. There's 1, 2, 3, 4, and the 5th going all the way up there. So that's already finished, and after that we need a correction, and the correction so far has been a 1, 2, or AB, and perhaps a C going down here, or WXY, because there's probably a little bit more complicated correction. And so indeed the price could very well go down to about 9,000, hold and go back up, or even go down to about 8,500 or 600 as we're having a support from here and go back up. I wouldn't expect the price to turn around here and go back up again. And also in the midterm, I guess we're definitely having a resistance up here from connecting these peaks here. So that would be around 11,600 or so. There is going to be a resistance, and it's probably going to be somewhat hard to breach that. So long term, it could very well be a quite positive outlook. I think that scenario is more likely, but if we look at the past, you can see these quite massive corrections as well. So, and that took some time. It was from January 2015, October 2015, so that's a year. And from this point here, December 2018, this is just a year right here, and we've had a much more gain than back here. If this scenario holds true, then we should expect the price to perhaps correct itself in the short term to about 8.8, 8.5, and then head back up again. So that's all I have for today. It's of course very difficult to predict anything with a high probability, because that's just the way the market works. It's quite unpredictable, but we have these guidelines and these ratios, patterns, Elliott wave theory to give us perhaps a better idea. And I don't know, if you have a better idea, let me know. And thanks for checking by. See you in the next video.